I think that what you have to do if you're Jay Powell is to say, well, this is that spike I talked about. And once the spike is over, things will go back to normal. But there's a lot of spikes. It's like very porcupine.
And once that 2 year starts to incorporate more of 2023, which is under a lot of scrutiny for the Federal Reserve's actions, we're going to start to see that 2 year become more of a dominant factor within FX markets.
Every country treasures its monopoly on controlling the supply and demand. They don't want other monies to be operating or competing because things can get out of control.
Self-destruct sequence activated. 3, 2, 1.
Is this your homework, Larry?
Ask him about the car, man.
Is this yours, Larry? Is this your homework, Larry?
Is that your car out front?
Is this your homework, Larry?
We know it's his homework. Where's the money, you little brat?
Welcome back to the channel, everyone. I hope you're all having a wonderful Wednesday. Let's get right into today's episode. So, what the is going on with the price of Bitcoin right now? We've seen some crazy price action over these last couple of days, and over the last week or so, we've seen some incredible things happen around the world that we should see the ripple effects from in these markets. Most importantly, the suspiciously over-leveraged hedge fund Archegos or whatever it is, capital, receiving margin calls for their positions that is expected to translate into some pretty hefty losses in the US and Chinese markets.
Interestingly, you look at who was running those banks and also their role in the financial crisis. And I'm thinking of James now, Morgan Stanley, who's seen the crisis. David saw the crisis.
Yep.
And I think that if you look at some of the names who were running some of the other firms at the time, I mean, Credit Suisse now and some of the others, I'm not going to make judgments about risk management.
The 10-year rate continues to rise. The DXY does appear to have met some resistance around the 93.5% area. Now, we haven't yet seen any massive sell-offs in the S&P 500, but there's absolutely no question that a major sell-off here could spark a chain reaction of capitulation, a move that could send the S&P 500 down more than 30%, a move that would likely see translated into a bearish move in the price of Bitcoin. Now, there are still a few CME gaps open down below the price, with the largest gap in CME futures existence all the way down here at $23,560. So what the hell happened last night with Bitcoin's price? Well, this is the chart that I sent to the group where Bitcoin then broke across this overhead resistance and tested the $60,000 level before a massive 5% sell-off took place that liquidated more than $600 million of longs in the process. But the bulls did step in and were able to get a bounce here at the $56,000 level. And the price right now is still holding support here above $58,000. Now, after a fairly quiet time in March, it does look like Bitcoin is getting ready to make some noise in April. Now, there are a few scenarios we're looking at here, both bearish and bullish. And while April has historically been a pretty bullish month for Bitcoin, it's looking more and more likely that we're going to see a massive correction here, and likely pretty soon. Let's go ahead and dive into this idea. All right, so starting here on the daily chart, there are some clear bearish warning signs that immediately show themselves. Let's go ahead and start with some indicators. So here is the daily MACD, and we are seeing some pretty clear bearish divergence here from swing high to swing high that hasn't really yet played out. But the most glaringly obvious thing that we are looking at right here is this bearish head and shoulders formation forming in the 26 and 12 EMAs on the MACD. If we go ahead and take a look at the volume weighted MACD, we are seeing something very, very similar with the volume weighted MACD, and we are again getting that bearish divergence that hasn't yet seemed to play out. Now, sometimes these bearish patterns aren't as visible in the price action, but sometimes they do hide within the oscillators because they're indexed to 100 and can sometimes give you a more accurate view of what price action is really doing. Okay, so if we go ahead and take a look at the daily RSI here, there is some clear hidden bullish divergence here on this most previous swing low, and that was when price fell all the way down to $50.3 thousand. Now, we don't see this hidden bullish divergence in any other indicators, and there have been 2 bearish divergences in a row on these previous swing highs. Now, the RSI here is technically in neutral territory, but it is quickly approaching overbought levels. So let's go ahead and take a look at the stochastic RSI and see if we can see if there's anything else going on here that we can't see in the regular RSI. So the stochastic RSI here on the daily is in bullish control territory. We did get a bullish cross back on the 25th of March. However, if we go to the 4-hour chart, it does appear that we are still in potentially bearish control territory, but we did get a bullish cross here just today, but this could be invalidated at any point. We have not had enough 4-hour closes to confirm this bullish cross. Now, should we get some bullish momentum, we should be able to see it here first in the stochastic, and we do have some hidden bullish divergence here that Bitcoin could see play out in the form of a move to the upside. Now, adding some more bearish confluence here to our idea is the Wukelich ratio. Now, this indicator has been very accurate at calling Bitcoin tops throughout its history. And right now, it does appear that the Bitcoin price is very overextended, and we could be looking at a move to the downside. Now, I did go over what the Wukelich ratio is in a previous video. If you want to go ahead and check that out, a link to that video is popping up on the screen right now. Now, further supporting this idea that another massive move is coming here on the daily chart, taking a look at the open interest, it is again starting to rise, hitting its lowest point closer towards the end of January, and it does appear to be heading back up closer to the upside. So here we have all of the open CME gaps with the closest gap bottom all the way down at $54,000 and the largest unfilled gap in CME history all the way down here at $26,080 with the bottom of this gap down here at $23,585. Now, whether or not these gaps need to get filled is really open to interpretation, but there is a lot of evidence supporting the idea that the Bitcoin futures market heavily influences the spot price of Bitcoin. I'll put a link in the description below to a recently published paper that dives into this idea a bit further. The next gap down here below this massive gap is all the way down at $19,155 with the bottom all the way down at $18,000. However, a move down this far is really not something that I'm expecting, and the only way we see Bitcoin fall this low, in my opinion, is if we see another black swan sell-off event. It's important to note that the 200 weekly EMA is just under 13K at 12,800. Now, this exponential moving average has historically been a great bottom indicator, as Bitcoin has found support here at the bottom of just about every bear market and or massive sell-off. Now, while ignoring these bearish warning signs would be incredibly irresponsible, we must consider the reason Bitcoin was created: the state of global financial markets, a weakening dollar, inflation, the 10-year yield rate, and the clear need for a reliable store of value in today's economic environment. It's incredibly difficult to be bearish on the price of Bitcoin here in 2021. Now, the charts and indicators are indeed pointing towards the bearish scenario for Bitcoin being most likely. However, considering the mentioned global economic issues, we need to plan for the potential of a bear trap, as there are some bullish signs in these charts that could be an early clue that we may be looking at just that. Now, what I'm really looking at here is the potential formation of an inverse head and shoulders. So should price fall below this support level here indicated by the point of control of this fixed range volume profile, price will likely then move down to close this CME gap right above $54,000. And we do have some strong support here indicated by this 8-to-1 Gann line. So a move down to this pullback target level would complete the right shoulder of this inverse head and shoulders pattern, a very bullish continuation pattern or reversal with a measured move target across this neckline where there's some pretty hefty resistance all the way up here at 66.8 thousand. Should price break below this diagonal Gann support, then we should see a bearish retest of this level before price continues falling further to the downside. And should that happen, then we will be looking to get buy orders filled all the way down here at the 21 weekly EMA, just above $39,000. Now, if we do get an extended correction, say down under $40,000, I really do not see the price of Bitcoin staying down there for long, as there are likely a ton of buy orders just sitting down there waiting to get filled, something that would send the price of Bitcoin skyrocketing to new all-time highs fairly quickly. I actually did a video on this idea a few weeks ago if you want to check it out. A link to the video is popping up in the top right of the screen right now. All right, y'all, that's it. That's all I have for you guys today. Thank you so much for dropping in. Go ahead and join our free Telegram channel. The link is in the description below. And if you're interested in accessing all of the trading and educational resources that we have available, visit the website 3candlecollective.com and send us your request today. And that's it, guys. Thanks again. Keep your eyes on these markets, and I'll see you all in the next video. Peace.